In a sea of market data, how do you find a stock that's about to sink? Let's break down one strategy. Okay, so how do investors cut through all that noise? This process is all about finding that clear signal. It works kind of like a funnel, systematically narrowing down a whole universe of stocks. So where do we start? With raw data, specifically end-of-week snapshots from momentum alerts. We're looking at sentiment, buzz, and price over different time horizons, to get the full picture. All right, so how do you get rid of all the irrelevant stocks? Well, you apply a filter. The filter is pretty simple. If a stock's 30-day buzz is too low, it just gets cut. Now, this is really important. Buzz is just the gatekeeper. It doesn't actually affect the final score. Okay, now we score them. We use something called a Z-score. You can think of it like grading on a curve. And notice the weights here. What happened yesterday is way more important than what happened a month ago. Then, the sentiment and price scores get combined 50-50 into one single composite score. So now we rank them. And the first rule? Only keep stocks with a composite score below 0. The rest are then ranked from lowest to highest. This gives us our top 5 data-driven candidates. But the process isn't over. This is where the numbers meet, actual human intelligence. This is the final step. An expert analyst looks at that list and picks the top 3 short sell candidates. So let's recap. You start broad, filter the noise, score and rank, then apply that expert judgment. Which leaves us with a pretty big question. Where does the machine stop and human intuition take over?